You were here 3 years ago at this conference, and you were asked back then which nation in Europe is leading the motor insurance telematics market. Back then you said Italy. Who's leading today and why?
So, the situation is not changed a lot. Italy is still the leading market at global level if we consider both the penetration and the kind of development of the usage of telematics data have been adopted by insurers. So in the Italian market you can find players that are using telematics data for more than one use case. So many of them are selling services to customers, many of them are using data to improve the claim management. Some of them are starting even to explore a more advanced pricing. Obviously it is not core in the Italian market, the usage of telematics data to implement an advanced pricing tool, but someone start to explore even that part. If you consider the European markets, the second market is the UK. Their approach has evolved in the 3 years, so the size of the market is almost 2 times the one we had 3 years ago, but still the penetration is far from the penetration that we have in the Italian market. In the Italian market currently there is 20% of penetration of telematics in the personal line. At global level, probably the most advanced market after Italy is South Africa, where one insurer is doing really well. They have on their own portfolio more than 80% of penetration of telematics, and they are using data with multiple use cases. They've been great in changing behavior, they are selling services, and they are starting to explore even the claims part.
In your view, what is then the hurdle or the problem in adoption in Europe? What do you think are the biggest factors?
The insurers.
Okay.
So as I presented this morning, customers are ready. If the value proposition is compelling, there is not a huge resistance from the demand. So the key point is that for an insurer is extremely important to identify how they would like to use the data and how they can generate value using the data. Only this way they can build the amount of value necessary in order to share part of the value with the customer through incentives, discount, and this way create a virtuous circle that allow the insurer to improve the solution, more customer to be on board. That has been, as of today, the story of all the best practices. So players that have used the data to improve the way they are assessed, managed, and transfer risk. Due to that, they have been able to have value to be shared both with customers and even with their intermediaries. So they are paying more agents and brokers to sell the product.
Great answer. And then, I mean, you have done a lot of work over the years with your think tank on that topic, so you probably have also a good view not only on the insurance side, but also the customer side. You say the customers are open to it. Is that the case across the board? Are there certain aspects where potential customers are more reserved? Or do you think it's really they're with open arms, and if you come with a good proposition, they will take it up?
So, if we consider the best practices that are few, so I'm talking about 5, 6 players around the world, they have been able to sell to the mass market, so not to niche of customers, but really to the mass market, each age bucket, each level of income, that kind of new value proposition, telematics based. That demonstrates that if the value proposition is appealing, if you have created something that fit with the customer demand, there is not a resistance to the concept of telematics or the resistance to share data with an insurer.
Yes.
So the customer resistance probably still exists on some countries, but is limited really to the older customer. So, and that's based on a survey that we did, identified that older the customer, bigger the resistance. But we are talking about a difference where younger customer, 80% are open to adopt a solution like that. On the elder, probably is 30.
Yes.
Means that it's more difficult to sell to that cluster of clients, but you have an addressable market that is 30% even on that segment of customers. So I think that the customer resistance is more an excuse for insurers that would like to wait or have not been successful in implementing.
Matteo, thank you very much for your insights and hope to see you again.
A pleasure. Thank you.